Tell you what, $40,000. Think about that. That's not a bad Tuesday morning, hey. Now, listen, I just want to ask you something. 40,000 on Tuesday morning, well, that's not normal. But what is normal? You, me, the US economy under Donald Trump? Well, those questions are front and foremost as the US Federal Reserve makes an interest rate decision this week. Now, given comments by the Fed Chair Janet Yellen, it's almost universally expected to be up. But the discussion about what's normal in the US economy, growth, employment, interest rates, well, that will dominate. Plenty of economists believe this week's rate rise is the first of 4 this year. You read it right, 4. By year's end, the US Federal Reserve target range could be between 1.5% and 1.75%. Remember, last year the range was 0 to 0.25%. Go further forward next year, as growth keeps picking up, those rates could be between 2.5% and 2.75%. So in the space of just a little over 2 years, the US could have experienced 10 rate rises of 0.25%. 10. The markets are anticipating the rate rises. You can see the US 10-year government bond rate here. In the depths of last year's worries were 1.4%. They were below that, actually. Today, almost 2.6%. So a little over 4 rate rises already built in. Now, here in Australia, as I've told you, many economists think those US rate rises will roll around the world. Goldman Sachs says it's a 50-50 chance rates will be higher here by the end of this year. But the Reserve Bank's kind of stuck. Our economy's not growing as quickly as America. Our employment numbers, February figures due out on Thursday, are much weaker than America's. So it seems unlikely the Reserve Bank is about to raise official interest rates like the US Federal. But money market rates say rate rises are coming eventually. Last year, the 10-year government bond rate here got to a low around 1.85%. They're now 2.93%. So again, that's 4 rate rises of 0.25%. And this is why the banks, also keen to slow down their lending books, are more likely to raise rates and make things tougher for the borrowers. One example, the Commonwealth yesterday said housing investors now need a minimum 10% deposit. That's up from 5% previously. As I say, things are just getting a bit squeezy. Let's have a look at the markets this morning and what we can see. Aussie dollar sitting at 75.75 US cents and 71.09 US cents, up a little bit overnight. If we move further forward on commodity markets, oil prices $48.47 US a barrel. That should have an impact, or rather 41 a barrel. That should have an impact on your petrol pump at some stage in the near future. The Dow Jones index of US shares trading down by 25 points, and here yesterday the All Ordinaries index of Australian shares were down by 16 points. Carl, Lisa?